All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. There have been a few times in my trading career where I have gone into a day like today heavily short. And I'm thinking of a few instances back in 2010 and 2011 where, things in the market changed. I'm heavily short, heavily on the downside. Then we get a day like today, and it's absolutely brutal for the shorts, and it's one that we see every once in a while, and it's one where, it's just pretty much straight up. The pullbacks stop, right? The pullbacks absolutely stop, and so you just know it's going to be a really bad day if you're short. Now, it doesn't have any implications to what's going to happen afterwards, right? But when we saw this morning the market open up and have that little shot down, little pop up, it was okay. You know what? This market, and I was on video, I said, I'll look for a 20K volume, but if there's not one of those, there's no way I'm stepping into it. We haven't seen any 20K volume, so, it has just been one of those, hey, you know what? Shorts just getting absolutely sawed off in a big way, and something that is fairly normal, fairly usual, not something where we look and go, man, this is super uncommon. And I know, I know it's easy to say, hey, this is so different, this is weird, this is strange, but that's the market. The market's always doing different stuff. But you can see the S&P here today creating a little bit of an island reversal with today's move, right? Basically saying, okay, we're going to be flat. We're now flat on the week. And if you got caught up in that panic sell on Monday, ouch, right? Ouch. Does the market do this from time to time during sell-offs? Well, yeah. Go look at any sell-off. I mean, you look at this back here in May, right? And these 2 days, boom, boom, pop, pop, right? Back above the 7. Everything clear. Oh, okay. Here we have, this nice pop day. Boom. Okay. These types of days are normal during pullbacks, but it does bring in the question of, hey, are we going to see a V-shaped recovery? Is it straight up from here? Which, is a possibility, right? It is a possibility. It could happen. But one of those where the odds aren't exactly in its favor to do so based on what we see in a lot of the metrics. Now, we are seeing a bunch of 3-7 crossovers to the upside here. And I want to talk about the ATRs and the impact here with the challenge with this ATR method. Because to me, this is the part, coming up with the algorithm, putting together the entry signals and whatnot, that's not very difficult. There are hundreds of variations of indicators or metrics that you can put together and say, hey, you know what? The odds are in our favor when we enter based on these metrics. Where it gets dicey is finding an exit strategy that works consistently. And that is where we went with the ATR method. That's what we're calling it. And it's a fairly simple method. But what has to happen with this is that the algorithm itself for entry signals has to be tweaked to adapt to this. Because now we need entry signals that are going to give us signals and not just say where the stock's going to go in the next little bit, but can it move with the percentages that it needs to move to really hang with this ATR method, right? It does me no good. It does me absolutely zero good to go buy Disney right here on the 3-7 crossover and apply it to the challenge. Why? Well, yeah, it had 2 days of run in it and then fell off a cliff, right? It never made that 2 ATR move. Now, we can say this about a lot of things, right? But when looking for challenge signals, we need not only a high probability of direction, but a high probability of movement in a 2 ATR range. After that, fine. We'll take our chances. If it's going to keep going, it'll keep going. If it's not, it won't, and we'll get bumped out, right? Here with Bank of America, 2 times got in with the challenge algorithm, and okay, it moved its 2 ATRs. It didn't move further, but hey, we were able to take nice gains and go, right? So when putting it all together, when making this happen, it's not just, well, when A, B, C, D, and E happen, then the stock's going to magically go up. It's, wait a minute, when these things happen, does it have a tendency to move to average true ranges? Does it have a tendency to trend? And that is a big element here to the algorithm. It's one of the big reasons why a lot of stocks just simply haven't triggered bearish. Right? UPS, we have the 3-7 downside crossover right here. It's not just that it's happening from highs, it's just that, hey, what's the probability of a 2 average true range move to the downside from here? And in many cases, with a lot of stocks that dipped, the issue with it wasn't, is it going to go up or down? It's, does it have a high probability of moving 2 average true ranges? Now, some of them did, right? Here's Bank of America, big drop, right? Downside 3-7 crossover. It moved 2 average true ranges, right? The market sell-off was severe enough to send some of these stocks, on that trajectory. But when we looked at, on Monday in the sell-off and where things were, in where some of the stocks were, the chances of further 2 ATR sell-off, according to the algorithm, according to the historical probabilities, significantly limited, right? So that brings us to today. There's a stock I like very much. We've talked about it. Microsoft, right? We talked about it earlier this week. Is, hey, if you want a bullish play in this market, Microsoft, Visa, and I didn't get into them, right? I didn't get into them yet, but these are going to be the stocks that are likely to outperform, and the stocks that are going to go to new highs. The timing on them, how aggressive do you want to be, and all of that, to each their own there. But we take something like a Microsoft. We go and apply it to the challenge today because it has a 3-7 crossover that's happening on it. It has a higher low, right? It's in a really nice spot. It's been bought up on great volumes the last couple days. This isn't something that is just kind of drifting higher on low volume after a high volume sell. No, there's been good volume, coming in here to Microsoft. It has everything that the algorithm says, hey, that it needs in order to go and make the trade. But as we put things together, we found a lot of charts, a lot of stuff that looked like this, that made this type of move. Many of them happened around earnings, right? When an earnings report came in and you'd see a downside 3-7 crossover or an upside 3-7 crossover and a big move. But what we found is that some of these stocks were not really getting a lot of follow-through to them. And the one thing we found is that stocks that move 2 average true ranges to create a signal, the odds of them performing well for a challenge trade that needs to move 2 ATRs further is very limited. It's not very good. It's one where, that pullback chance is significant. The consolidation chance is significant. And the times where things boat race up are fewer than when they consolidate or pull back. And then you apply that to the options. And this is a net lose situation. Even though it's a situation that I kind of like, it's a situation where when it moves 2 average true ranges in a matter of 48 hours, the chances of moving another 2 average true ranges are very slim. Now, are the chances of it going higher tomorrow pretty good? Yeah, probably. It probably does go higher tomorrow, given the way that it's traded here, especially in the morning. I would expect to see it gap up. The challenge trade needs more than that. And you can see the average true range right here is about 285, and the stock has moved over $6 from the low from yesterday in order to create this signal. And we looked at the data, we looked at what was out there and said, no, we can't trade those. We can't jump into those because the odds and the probabilities just are not in our favor. And unfortunately here this morning, or today, we have Visa and Microsoft doing that same thing. Visa has moved more than 2 average true ranges to create the upside crossover to it. And I know I'll get a comment that says, hey, this sounds just like a reason not to get into something. And you're absolutely right. It is a reason not to get into something. And it's a situation where odds are not in our favor, right? And you look back here in June when we went and made the Visa trade, we almost had that 2 ATR move before the entry, but not quite. And so it wasn't, that full 2 ATR. We were able to go get in, have some fun, and run with it there. So, from a challenge standpoint, yep, we have the little upside crossovers here with Visa and Microsoft. I'm not very surprised that they're two of the, quickest ones to do it, but neither are triggering right here, and both of them probably go higher in the short run, at least this afternoon and tomorrow. If I had to go and put a trade here on them. So no new signals, here into this afternoon. I've given a lot of thought to, hey, should I go out and make a trade? There's one I really like out there, and I'm going to show it to you. And it's one that I'm going to trade, but I'm not going to do it for the challenge. But I'll show it to you. But with the challenge, I'm just going to continue to run, with the algorithm, with the, step by step. And I know that can be maddening for some being in cash. Heck, it's maddening to me. But it is what it is, and going to run with it. And we'll enjoy the fruits of the labor afterwards, or whenever the next signals come in, and make sure the odds are strongly on our side, and we're not just kind of looking and going, oh, this looks nice, or hey, that looks nice, out there in the market. But there is a trade that that is very tempting to me, and I've made the comment several times that look, I long term I expect the market to go to new highs. Short term, I just expect another round of selling to come in and to be very aggressive. This type of move, though, is not unusual, right? This is not unusual in the midst of sell-offs, right? We don't have to go back too far. Go look at any kind of sell-off in the market. We almost always have some sizable, hefty bounces that come into play. I'm not real interested in getting short down here earlier this week, right? Not really, doesn't really tempt me. Yep, market may keep going down, but doesn't really tempt me. Now that we see what? We see implied volatilities going down, and we see stocks going up. What's happening to option values, right? Option values are starting to get into a very interesting spot, and in a spot where if you're on the put side, and the market comes back and retests lows and even breaks the lows, what's going to happen to those put values? They're going to surge because they're going to get all the implied volatility back in, and plus you're going to have the correct direction. Now, what's maddening about making a play like this? Well, tomorrow the market could stack another gain. Then the market could go up the next day, and then the market could stall right here, and then the market, when it dips just right back to where you bought the puts. It's never any fun. It gets a little maddening, right? But it's something that we see happen, that we see take place. Right back here in October for the challenge, I went and got into some market puts, right? Got into some market puts, in them for 3 days. The market started to go up on this day, and I just couldn't take the risk anymore because they were a little too short term. 2 days later, kaboom, down goes the market, right? Painful, right? Painful. And it's not that I was wrong. It's not that I was in a bad position. It's just sometimes how long do you have to wait? Can be very dependent on what else is going on out there. So I want downside exposure, in this area. And how do I go and get it? Well, I'm going to go make a trade here before the close today. And it's going to be on the VXX. Right, and I'm just going to trade the volatility index, and we see the VXX. It's had a nice push on down. It's gone from 30 down to 26 in the last couple days, and this is something where if I can get some decent value for a move back up at least to these highs, and I do think there's a chance it goes higher. Great. I'm willing to step in and put some in. Now, I am not willing to step in and put a stop in and put a full position on. I'm not willing to do it. Not yet. Just not yet. There may be still a stall day tomorrow or the next day. So I'm going to put half a position on right before the close. In fact, I'm going to do it on the closing tick because you think about today, what's happened to the short sellers? They've been squeezed. On days where short sellers get squeezed, you tend to close on the highs. And I do expect that the market will close on the highs and therefore the VIX on the lows. So I want to get in on the last tick. And what I'm looking at are the 26s, the 26 or the 25 and a half, the 26 and a half or 27 calls, right? Because I'm playing this to go up. I looked at it with the VIX and the put side and the call side. Nothing I liked too much. The spreads were a little high, but these 27s going for about $1, right? Going for about $1. A move to 29 is a double. A move to 30 is a triple, 31 a quadruple, 32 a quintuple. And all of those are very realistic possibilities. And so that's what I will be doing going into the close. Again, a half position. I'm not going to be throwing a ton of money at it. I still think there is some risk of, further rally in the market before some downside. But, that's how I'm going to kind of go into the close knowing my metrics are shifted, right? My metrics are down. We're having a relief rally. Can I sell into this relief rally here? Now, if you want to play the bullish side of the market and all of that, we talked about it this morning. It's pretty easy. The risk reward sets up. It's buy today's lows, stop, go. And, for the bears, you don't have confirmation until today's lows break. So, by the time I get confirmation for a VIX trade, it may be a little too late. But that's a trade I'm going to put on here into the close, and we'll put a half position. And if we gap up tomorrow, and we see a high volume period come in, I'll put the other half of the position on. But if and when I do, I will let you know, that I did get in. Now, I did consider this trade for the challenge. I absolutely did, and I think I could do it. Right? There's nothing, we can always go back and invoke rule number 10, because, are we in an unusual circumstance? Yeah, kind of, but not really. So I'm not going to do it, for the challenge, but I will do it personally. Again, it's not a trade that would make or break the challenge, so could justify it and do it, but I don't want to open that can of worms here. I want to continue to run and prove the challenge out, in real time with the community, as the challenge is. After we've done that for a few challenges, my ability to step in and wrangle a few things here and there will ultimately increase. But I did want to share that trade with you, and that is what I am looking at going into the close here today. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.